So one of the first things when we talk about regulated money, what do we really mean by that? So we talk about primarily stable coins and CBDCs, which are also called central bank digital currencies. Now, by definition, a stable coin is a cryptocurrency. It is created on a blockchain, but it is backed by a currency or by an asset. And that is why we say its price is stable. So when we say stable, what we really mean is that its price is directly linked to that of a real world asset. Now let's take an example. Bitcoin is not backed by anything. So the price of it can go all the way up to $110,000 and all the way down to $10. That is the reason we call that a regular cryptocurrency. But then there is something called USDC or USD coin. It is again a crypto issued on a blockchain, but for every $1 of USDC which is issued by the creator, $1 is kept in their bank account. And the value of that USDC is backed by the value of the dollars lying in their bank account. And that is why we call it a stable coin. Then there are issuers who have kept gold in the locker, and against it they are issuing the stable coin. So we call that a gold backed stable coin, fiat backed stable coin. But that's what we mean by a stable coin. When we use the word central bank digital currency or CBDC, that's a whole different concept. It is issued on a blockchain, but it is not called a cryptocurrency because it is issued by the central bank of that country. Let's take an example of India. Reserve Bank of India is the one that issues the Indian rupee. Today, it is issued in various forms, in digital form also, through banks. Now, Reserve Bank of India has started a new technique, a technology of a blockchain on which they are issuing the e-rupee. Because it is issued by RBI and they are the ones who are legally allowed to issue the rupee, we call that a central bank digital currency. But if, let's say, in future ICICI Bank is given the permission to hold rupee in their balance and then issue something on a blockchain, that would be called a stable coin. So I hope that distinction is clear. CBDC can only be issued by the central bank of the country. Stable coin can be issued by anybody with the backing. Now, in Europe, we have the first law, which is MiCA, for regulation of stable coins. Under this law, various stablecoin companies have gotten themselves registered. Now, what that means is that when they register, they are now legally issuing the stablecoins. They are following a legal process. And based on that, they are now using stablecoins as a business. Tether, USDT, which is one of the most popular stablecoins in the world, did not choose to get registered in Europe. So now it is no longer legally allowed there. And one by one, as more and more countries come out with these laws, we will see more and more regulated ones coming. So as of today, the biggest regulated stablecoin in the world is USDC. Now, a lot of people would want to know, why should I care about stablecoins? I mean, if I want to make money, I will only do crypto. But actually, there are lots of money-making opportunities in stablecoins also, and I'll explain to you. Let's take a very simple example. Many years ago, CoinDCX, one of the crypto exchanges in India, used to allow anybody in India to buy USDT, which is a dollar-backed stablecoin, and then you could lock it like a fixed deposit with them, and they would give you interest, which at that time I remember was about 15% per annum. Now look at the benefit to an Indian. As a regular Indian, I can only hold Indian rupees. But CoinDCX, for example, at that time gave me the opportunity to firstly hold dollars without any permission anyway, because I'm not actually holding dollars, I'm holding a crypto. There were no laws at that time. So my money or my rupee is now connected to the dollar. If the dollar price goes up, I'm benefiting from that. And they are giving me, say, 12% rate of interest. So automatically that becomes a very good revenue opportunity. Today, stablecoins are giving that same kind of thing, and many stablecoins have actually started issuing their own yields also. The logic is very simple. When you give them money and you buy a stablecoin, the money goes into their bank, they convert it into, say, treasury bills, they convert it into bank fixed deposits, and whatever interest or yield they get on that, they share most of that with you. And that is the reason stablecoins are now beginning to grow very, very fast. And in fact, you'll be surprised to know that last year, if we just look at two stablecoins, USDT and USDC, just between two of them, the total volume they did in 2025 was about $30+ trillion. which is almost the GDP of US and multiple times the GDP of India. That is the volume that stablecoins have already hit. This year is likely to be even more. And the reason is this: it makes payments very easy. So today, if you have to receive money from another country, it takes several days sometimes, lots of commissions. But in stablecoin, it's virtually instant and the transaction fee is near zero. The only transaction fee is what the blockchain charges in the name of gas fee. And if you use a chain like Polygon, the gas fee is near zero. That is the reason stablecoins are becoming more and more popular. If I give you some examples, Shopify, which is the world's largest e-commerce platform where people can create their e-commerce stores, supports stablecoins. Visa supports it, MasterCard supports it. All these large enterprises are now supporting it. Even Stripe, which is one of the world's most popular payment systems, they are supporting stablecoins. And we are also beginning to see a lot of companies accepting it very happily. So, for example, Open Router, DigitalOcean, these companies now allow you to pay using stablecoins, which many times makes everything very, very easy, much better than a regular credit card. Any questions so far on what we've been discussing? The second point is, what is the difference between a regulated digital asset and a speculative crypto? So things like Bitcoin, Ethereum, these are considered speculative cryptocurrencies because the price can go absolutely up and down. Regulated digital assets, as of today, when we look at the world, there are two types primarily. One is the stable coins, and as of right now, the fiat-backed ones are getting registered, legally recognized in Europe. US is coming out with this law, many other countries are working on it. And then we talk about central bank digital currencies, which by law itself are legalized. India has already launched its own CBDC. In fact, some of you should try it. Your bank will give you a separate app, and it's supposed to be like using cash. So it's a very interesting thing, and I would recommend all of you to actually try using it. So that's the distinction between a regulated digital asset and a speculative cryptocurrency. Now, as we look forward, where are we seeing this being used? For payments, for remittances. So people sending money home who are working in one country, sending money home, very cheap and fast for them. Many people are now using it for payroll. So if you have employees around the world and you're paying them, maybe they're freelancers, maybe they're developers for you, your entire payroll happening on stablecoin becomes actually much, much easier. And that is one of the use cases we are doing in Sara, which I'll explain to you. And it is being also used as treasury. So many companies and individuals are now holding stable coins as an investment. Like today, when a company has excess funds, they can deploy that in mutual funds. Many are now beginning to also deploy in stable coins because it's legally regulated and it allows you to hold the US dollar. So if you're a non-US company, it's the easiest way for you to hold dollar on your treasury. Now, which is where now I'd like to talk about why I am talking so much about this and what Sara AI wallet is actually trying to do. When we look at the existing wallets today, the crypto wallet, they are not designed for stable coins, they are designed for traders or people who are using cryptocurrency for speculation. They are using it for, DeFi or decentralized finance. That is why if you open up any of these wallets like MetaMask or Trust, you will find all the major blockchains supported, all the thousands of crypto supported, and hundreds of features, which usually gets very complex. But we are not looking at that audience. We are developing this only for normal businesses, freelancers, companies using stablecoins and CBDCs, not speculative crypto. So it becomes very easy for you to store and to transfer them around. So our vision is to make it so simple, and I'm going to, of course, show you how that works, where you can just simply say send 100 Paul to Keshav, and immediately the system knows who to send it to and it sends it off. You don't have to worry about getting people's addresses, storing them, making mistakes. You don't have to worry about getting the contract addresses of different cryptos. No, only the supported, regulated ones will be allowed inside your wallet. They're already pre-configured. So you don't have to worry that, I may end up getting the wrong thing. Like nowadays, there is a concept called Flash USD, which is a completely fake thing. How do you as a regular user even understand that this is the fake Flash USD or this is the real USDT? So these are some of the kind of issues that a wallet for regulated asset will solve. Any questions so far? This is kind of the introduction. Then I want to just give you a very short overview of how it works. In the meanwhile, if you have any questions, please feel free to ask me. Let me just share my screen. Yeah. Okay. So if you are able to see my screen clearly, this is what the wallet looks like. I can take a lighter version so it's clearer for all of you. So for example, as of right now, you will see USDT and USDC in it. Now you will also notice Paul, and I wanted to explain why that is here. Even though I said this is only for regulated stable coins, you have to use these cryptocurrencies, or sorry, these stable coins on a blockchain. And that blockchain is going to require transaction fee to be paid in its native currency. So when you are using USDC on the Polygon blockchain, which is the cheapest, the transaction fee, which is a very tiny amount, still needs to be paid in Paul. That is the reason you will see Paul there. But we are also working on a very good innovation here, where very soon you will not need to hold Paul. And the system will take care of the transaction fee. We will be launching that in a few weeks, and at that time, I'll explain to you how that actually works. Another very interesting thing is how it actually works. So we are using the power of AI inside this wallet, and you can set which AI you want to use. So a very simple option is here where you could choose from a drop down here. So this runs on an open on a platform called Open Router. You can create a free account there, get an API, and if you don't pay any money, you can use their free models, for example. You can just select that. And now that free model will be using and running the wallet for you. And I'll tell you what the AI actually does in this picture. If you are ready to put a few dollars into your Open Router account, you can start using the paid ones. Then the voice facility becomes active. So when you want to send money to someone, all you need to do is speak out or type in send so much to so much and whichever currency you're sending. Now the AI figures out who you're sending to. There are two ways in which that happens. There's a bname concept and there's a directory. I'll have a demo session for you on this very soon, and all of you can walk in through it. The AI then understands what you're trying to do. It gives you suggestions if required. So let's say that you have balances in multiple stable coins. It can check as of right now which has the lowest gas fee, and it can recommend that you use that. If suppose you want to send $100 but you are having $50 in one account and 50 in another, it can figure that out and tell you, should I send 50 from here and 50 from here? All of that the AI is doing for you. But to actually send the final transaction, you have to type in the word confirm, because we do not want to give AI the power to actually move your funds. When this money moves, at that point of time, your private key, which is in your laptop, will get decrypted. It will sign the transaction and it's done. So even the AI doesn't actually get access to your key. Security is the number one issue that we are looking at here. That is why this wallet runs completely on your system. So we are developing it in two ways. So for those who are slightly technically advanced, they can use something which we call as the Python version, which again, I'll be very honest, is quite easy to use. And we are also making the single web page model where you can even run the wallet on your phone without downloading an app. It's just one HTML page. Someone has asked about how much does Polygon charge. I would say it's few cents, sometimes not even 1 cent per transaction, right? Link to access Sara AI, yes. So it is a publicly open source platform. I am just going to show you the link here. Just give me a second. Yeah, and I'm going to also share this with you. So I'm going to be doing a lot of live sessions, step by step, walking you through it. I have put the link there. You can just go to this GitHub repository and you can download the software from there. As of today, the single page version is not up. That is why you just need to run a few lines of Python to get it to run, but it should run very comfortably on Linux, Mac, as well as Windows. A screen share is given here. The help file is here. Now, for example, I told you the sending is very, very simple. Now, more than sending, suppose you want to bridge. Now, that is a very complicated concept usually in crypto, where you may be having the crypto in one blockchain, but now you want to convert it into another blockchain. We have made it as simple as this: bridge 100 USDC from Polygon to Arbitrum. So what is this going to do? You already have 100 USDC on Polygon blockchain. It is now going to swap that using a third-party provider and convert it into 100 USDC minus whatever the fee the chain charges and that agent for the bridging, and convert it on the Arbitrum. Sara AI Wallet does not charge you any fee. It's an open source project. Anybody in the world can download, see all the code, trust it, and then start using it. It doesn't charge you anything for it. Of course, some of you may have a question then what is the revenue model? Why are we doing this? We are developing a lot of accounting facilities on this, and that is where Sara AI as a project will make its own money, but nothing on the transaction fees. Suppose you want to swap, like suppose you have on a particular chain 100 USDT, but now you want 100 USDC. All you need to do is type in or say swap 100 USDT for USDC, and it will do it for you. Can we redeem the USDT after holding it in the wallet for some time? Very good question. Now, this is a complex question. I have spoken right now about making payments. That means it still stays in crypto. I have made a point about swapping, but that is again crypto to crypto. Bridging crypto to crypto. When you use the word redeem, what I presume you're talking about is getting it into your bank account. For that, you are going to need a service like a swapping service, like one of those bridges which are available today, quick swap and all, or you are going to use a on-ramping, off-ramping service like on-ramper and all these services, or you can use any normal crypto exchange. Now, what happens? The problem with crypto exchanges is if we keep our assets with them and tomorrow something goes wrong with that exchange, all your money is gone. So, for example, some time ago, WazirX, one of the top Indian exchanges, was hacked. A lot of people lost a huge amount of money. Similarly, in the past, many exchanges have gone down, like FTX exchange. That is why in crypto they say not your keys, not your coins. You are supposed to hold your keys with yourself. That's the reason the world prefers to use what we call as the non-custodial wallets. So things like MetaMask, Sara, these are non-custodial. Your private key is with you in your laptop or on your piece of paper. Nobody else in the world has it. Even MetaMask doesn't have it. Even Sara doesn't keep it. It's with you. But these wallets cannot convert it into fiat currency for you. For that, you still need to use an exchange, or depending upon your country, there are peer-to-peer providers, all of these people, and they will do that for you. So that is why the concept of redeem is different. Now, Sara is only the open source software. We are not running any kind of exchange or giving any financial services, not at all. It's just an open source software, making it very easy for you to hold your stable coins, do payments with them. Now, let's say you want to send out an invoice. So you could just say, okay, make a payment link for 100 USDC. And it'll create it with the QR code like the way UPI does. And that can be sent by email or Telegram or WhatsApp by you to anybody. When that person pays you, Sara can take care of your accounting. And it can show you that the reconciliation, so much money has come, so much money is still pending. That's the whole vision behind Sara. So Sara is the Paytm of crypto. Yeah, that's a very good way of saying. So I would say it could be considered not crypto, but specifically regulated crypto. So we are only going to cover stable coins which are regulated. So that is why in the initial we are not supporting USDT also, because USDT or Tether is not regulated. In fact, on their website, they very clearly say that they cannot even return all your money at any time because they invest it into, for example, Chinese companies' commercial papers. USDC, on the other hand, is regulated and it maintains your money. So you will always get it back. So we are only going to support the regulated stable coins and central bank digital currency. How to use fork? Very simple. If you are comfortable with GitHub, just go to the repo and you will be able to fork it and start doing your own. You can make your own version. If you want to submit changes, you can submit them. We can review it. If it makes sense, if it's secure, we can push it. It's like a regular open source project. So swapping will also be only within the regulated ones. Absolutely correct. We are not going to be supporting the non-regulated tokens. But I will be very honest with you, it's an open source software. So if you feel that the software is good, but I want to use it for crypto, that's totally up to you. Then you can download it and then you can manually add the contract addresses of whichever crypto you want to support. And then you can provide it as a service to your clients if you want. It's an open source project, so there are no restrictions on it. As a project, when we add in the contract addresses, we are verifying that these are of the supported crypto. So we will find out the authentic contract addresses of USDC on all the blockchains, add it. All the other regulated ones, add it. You can download it and add unsupported ones and you can start doing it. That's totally up to you. There's no restriction on it. Will the Sara wallet be available on App Store, Play Store for ease of access? No. So the approach we've taken is a little different. We want to make it simpler. So instead of an entire app, we are building a single page HTML version. So you can just go to the Sara Wallet website, which should be up in a few days, and you can open it there and run it, or you can just download the HTML on your phone. You don't even have to download an app. You don't have to worry about updating the app. No, you just download an HTML file and it does. Which other similar platforms available? I did not understand your question. Do you mean which are others similar to what Sara is doing? I don't think any single one of them. No, there's nothing. That's the reason we actually started to build this. Now, I, as you know, come from a cybersecurity and crypto investigation background. So you may be wondering, why am I making a wallet? I regularly see people losing money from their Trust wallet, from their MetaMask. When I started to investigate, I realized the reason was complexity. I'll give you an example. Suppose I want to use my MetaMask to pay for a subscription of this website called OpenRouter, and I want to buy $10 worth of subscription. The system, which is Coinbase payment gateway in this case, takes an approval for unlimited transactions. Now, why is it doing that? Because that's the way it is working as of today. It is taking permission from you, and most people don't read it. They just say, okay. In future, if something goes wrong at their end, your entire wallet can be emptied out. So what I realized was that wallets like MetaMask are not built for regular users. They are built for traders and speculators. That is why it has so many options like signing contracts. Most people don't know what they are signing. So they end up making a mistake and then they end up losing all their crypto. Sara Wallet is deliberately designed to not support those kind of things. It is meant only for regulated assets like stablecoins and CBDCs. It supports accounting and such kind of features. So it is designed for a completely different audience and very simple to use. That's my number one point here. You should be able to talk to the wallet. The AI should be able to understand. If you don't know what you're saying is incorrect, AI will tell you what's wrong, guide you through, and help you do all these transactions. It runs totally on your system, uses your API key, so no data goes to anybody else. How can Sara be compared with cross-border payments offered by banks that support stablecoins? Very good question. Now, as of today, very few banks actually support stablecoin for global payments, because I'll be very honest with you. If you're using stablecoins, why do you need a bank? The whole point of stablecoins is to make transactions instant. You should ideally never hold your stablecoins with a third party. See, even banks shut down. Few years ago, a very large bank in the US, which was specializing for startups and the crypto industry, shut down. A lot of crypto projects lost millions of dollars. So please remember, even banks can shut down. So the ideal way to hold your crypto is always yourself. That is why you will use a MetaMask or any other non-custodial wallet. Does the key stay in the Sara wallet? Very good question. The keys are in your laptop. So Sara wallet is basically a set of files in your laptop or your phone. Even in your laptop, it is lying in an encrypted form. So when you go and look at it, you cannot read it. It's like encrypted. You have a password, right? So when you're logging into Sara wallet, you put in your password. When it is going to send the crypto, that password is used to decrypt your key, sign the transaction, and for those few seconds, it stays in your browser's memory. So it doesn't go anywhere else. It stays with you only. Does it remember? No, it doesn't remember. So your password, I mean, if you get locked out or after a certain number of minutes, you get locked out of the system, or when you open it up, you have to sign in again. When you're making these transactions, if it is within that time period, you just press confirm. So cookies and all, no, it doesn't really remember any of this. No, it doesn't. So these are interesting questions. So during one of the live sessions that I'm going to take, I will actually, I'll show you the code, and in front of you, I'll set it up, and then we'll see how the code is working. Then you will understand. And like I said, it's open source, so please download. And if you are technically competent, you can actually get these answers directly. This recording will be shared. Absolutely, it will be shared. Basically, this is P2P payment mechanism. Well, P2P is usually, the connotation is different. Peer-to-peer is usually, I'll explain to you. So say you go to a website and you see a list of people in your city who are ready to buy and sell, say, Bitcoin for cash. And then you meet them. That's usually what we call peer-to-peer. This is how crypto is supposed to be, sending from one address to another. Now that address could belong to an individual, a company, a bank, anybody. Try to understand, Sara AI is not doing this transaction. We are giving you a simple software. You are using the software to do all this. So the payment is happening through a third party. The swapping is happening to a third party, and all those details are visible to you which third party comes in. Sara only gives you the software. So we are not performing the function of a peer-to-peer mechanism, bank, nothing. We are simply giving you software that you can use, software that you can change. Suppose you download it and you say, I don't want to use the word Sara wallet, I want to call it my wallet. Suppose you are Rahul, you want to call it Rahul wallet, you can do that. We're just giving you the software. We are not getting into this business. Now, when we look at MetaMask, and a big differentiator here, MetaMask sells and buys for you or allows you to use their credit card, which they have launched in partnership with, I think, MasterCard. It gives you insurance. So it is providing those services. We don't provide you any service. We are simply an open source project. You download it, make whatever changes you want to it, and use it however you want to use it. I hope that clarifies it. Yeah. Any other questions? And if during the transaction, the third party system hangs or does not complete. Okay, very good question. So in crypto, your money either goes or doesn't go. It doesn't really get stuck. Now, what Sara does, I mean, and what all wallets today do is the money is in your crypto, in your address. There's a private key to that address. Transaction is signed, sending the money, the quantity from that address to another address. Now, this transaction happens on the blockchain. It either goes through or it doesn't go through. And that is why we say blockchain transactions are atomic. Now, in the real world of Swift and banking, many times the money can go from your account, but it doesn't reach the end party. And the reason is simple. It is going through multiple intermediaries. If I am sending money from an Indian bank account to a Sri Lankan bank account, it doesn't go direct. It many times goes through New York, for example. And there are those banks there which are doing Vostro and Nostro accounting, and that's how the money flows. So sometimes your money can get stuck, then you tell the bank, then they figure it out, and it can take days. Blockchain doesn't do that. In the blockchain, the money either leaves your address or doesn't leave your address. So the chances of failed transactions are that, okay, the transaction could fail. In that case, the money remains in your account. Or the transaction goes through and the money is gone. So that's how blockchain works. And Sara AI doesn't do anything special in that. That's how every wallet in the world works. It holds your keys in encrypted form. It signs transactions for you. It shows you your balances. But the real transaction always happens on the blockchain. Whenever you are checking your balance, it is not coming from Sara wallet. It is picked up from the blockchain in real time. There is no other source of truth. In the crypto world, there is one source of truth, which is the blockchain. So all these blockchains are queried and your balances are shown. Hope that answers your question. In the open source Sara wallet, is it dangerous? For example, if I fork it, rename it, change the contract, and I've set up and then shared. So in any open source project in the world, it is ultimately all about the credibility. So people can see the wallet and say, okay, Sara has explained to me, so I trust it. When you create your own, you have to create that people who are trusting it. And secondly, there's nothing wrong in making your own. Like if I look at MetaMask, do you know even MetaMask is open source? Many people don't know that. MetaMask entire repo is available on GitHub. You can download and make your own version. So nobody stops you. But then people may not trust your wallet. They may trust MetaMask more. So it's up to you what you do with the code. People will see whether and people can check the code, and that's how it kind of works in the real world. But almost every wallet is open source in the world today. Can we put limits on transaction? Yes, of course you can. So in Sara, we are building a lot of, so we are looking at the business or freelancers, e-com providers. So we are thinking, what are the services they need? So definitely putting a limit that by mistake also, if somebody gets access to my laptop, has my password, I can still have some limits. But of course, if somebody has control of your laptop and your passwords, then they can reset the limit also. But yes, a lot of these features will be there so that by mistake, you don't end up sending more. And those features are there. You can activate and deactivate them. Any other questions? Now, one thing that we are working on is a concept called BName or blockchain name. Today in crypto, for every person, you have these long addresses, 32 characters, 40 characters, long addresses, and you can't really look at one and make up. So we are coming out with a system where you can reserve your name. So suppose my name is Rohas and I have this particular address. I can register it by paying a one-time fee to Sara, a very nominal fee. And now forever, I can just tell people, if you're using Sara Wallet and in future other supporting entities, my name is Rohas. You can just send me crypto and that you don't have to worry about my address. So that makes it very easy for my friends and network to just say, send so and so to Rohas. Then it connects to the BName system, figures out who Rohas is and what his address is. It figures out, is this a, which, is it on Solana or is it on an EVM chain? And then it sends the money forward. You don't have to worry about people's addresses. And if my name in BName is Rohas, then nobody else in the world can get that. Can the BName be traced to any individual? Very good question. So when you're issued a BName, we do not do any kind of KYC, right? Because we are not providing any kind of regulated service. So anybody can come, pay the money officially to Sara. You can use your credit card to pay, bank transfer to pay. It's an official service. What you're getting is simply you could say a username or something like a domain name. So Keshav Maheshwari says that this is my address and I want to be known as Keshav. So immediately that is locked into our system. So all that our system knows, and that's the only data it has, that Keshav Maheshwari, or rather Keshav, is this address. We don't care what your full name is. What do you want as the B name is all that we ask you. You want Keshav, this is your address, end of story. We don't have any other data. So we cannot give you the data because we don't take the data. We don't store your IP address, nothing. We're not doing any regulated service here. And we are not restricting you. Like if you look at today, there is already Ethereum name service, unstoppable domain. Now, what I find is a problem in that, right? The problem that I find in that approach is they are restricting extensions. Like suppose you can take keshav.crypto or you can only take something. But why? Who are they to restrict? So in BName, there is no restriction. You can just take ROAS. You don't have to take ROAS.India. You can take India. You can take whatever you want. One word, you can put a dot in it, you can put .com in it, you can do whatever you want. It's your BName. Can you show how to create a username BName in Sara? We are going live with BName very soon. Currently, we are in the testing phase. As soon as that is done, I'll be showing you how to do it. Very, very simple way of doing them. So that's the vision and mission behind BName. We wanted it to be very easy for people because we are seeing what's happening. More and more people are beginning to use stablecoins. And by 2030, everybody expects that almost all transactions in the world are going to be blockchain based, whether it is CBDC by a bank or stablecoins. But that's where we are seeing digital transactions moving. And we want to make that as easy as possible. And I feel BName is one of the most important ways to make it easy. Because all people need to remember is that one name of yours. And then they can quickly send payments to you. Any other questions? Okay, I don't see any other questions. So we'll end the conversation for today. It was nice speaking to all of you. Have a nice weekend. See you. Bye-bye.